Ladies and gentlemen, welcome to a very special episode of the Big Tech Frenzy. Some would even call it the Fiscal Frenzy. Essentially, what we're going to be doing today, at least for a portion of the show, is breaking down a company, looking at their financials, which, 99% of that work I get done on Fiscal AI, so that's the tool that we're going to be using. This ended up happening. Steven Fiorillo ended up sending quite a tweet. Sorry, I'm out of breath. I literally ran here. But let's go ahead and look at this tweet, which I got a message from Steven saying I have to review, and he's even willing to come on the show to talk about it. But let's quickly take a look. Hello, Joseph. Someone sent me over your post comparing Dillard's to Nvidia to me after our discussion the other night. Well, you're correct that Dillard's has outperformed Nvidia over a 5-year period. I'm wondering why you didn't go back a decade or more, considering Dillard's was still hovering around its pandemic lows 5 years ago. From the beginning of 2020 to the end of August of 2020, Dillard's has fallen 56.24%, $69 to $30, while Nvidia has already more than doubled its shares and has increased 126% on a split adjusted basis from $5.90 at the beginning of 2020 to $13.37 at the end of August of 2020. I mean, good point. I put together a side-by-side comparison of Dillard's and Nvidia over the past decade, and Dillard's has increased 489%, while Nvidia has generated 33,000% of appreciation. Well, the quote-unquote boomer department store, as you put it, has outperformed Nvidia over a 5-year period. The beginning of the 5-year period just happened to be Dillard's was establishing a bottom from the pandemic. If I were to look at the maximum historical return on Seeking Alpha, it indicates that Dillard's is up 1,600%, while Nvidia is up 439,000%. I'm not sure what your vendetta against Nvidia is, but its appreciation over the past decade shatters just about every other investment in the market. Happy to discuss the differences between Dillard's, Costco, and Nvidia if you're interested. I mean, yeah, if I didn't see Joseph Carlson's post about this, but selecting a perfect time frame where it shows that a quote unquote boomer department store is beating your stock, that's maybe not the best thing to do, right? Now, we obviously are going to be talking about a special stock. We can talk about what that might be. And I'm actually going to put chat up on screen because there might be some people who agree with this name. There might be some people who disagree with this name. I'm perfectly happy to see the differences in chat. Better not be Duolingo. Yeah, BMNR, Duo. A lot of you guys think it's Duolingo. We did say we were going to talk about CrowdStrike, so that's quite interesting. I went half port into BMNR in Tom Lee We Trust. I mean, that is ambitious. Marvell, Shift 4. All right, it's Duolingo. I'm starting to look at this company because of a large sell-off. Now, I wanted it to be about CrowdStrike, but it is actually appreciated so quickly from its dips right after earnings. Okay, Duolingo, on the other hand, has crashed a little bit. Not Duo, I'm talking Duolingo. Not DUO, which Duo Networks actually ended up having quite a nice day. But Duolingo had quite a poor day today, leading to a near 8% drop, under $300 per share. And the more days it has like this, the more interested I become, because obviously I still do think that AI disruption could potentially appear, or that there might be some movements from management or some of the things that they stand for that I do not agree with. For example, they've made a lot of extremely woke statements. Not that I'm anti those statements per se, but I hate whenever a company is political in any direction. I think that it's bad for business, and you immediately cut off, half of the world from wanting your products. I mean, look at Tesla, which is on the other side. I hated whenever they did that move. The financial aspect of their company got greatly hit from them picking a side. I think companies do best whenever they do not pick a side. They stay apolitical. And yeah. Amit sent me something in chat and says, check this out. Give me one quick second, and then we will go through all of their numbers, because I'm taking a look at their numbers, but I will watch what Amit sends me. Is there any other way for me to watch it other than Instagram? Because I don't even know if I have, if I'm signed in on Instagram on my computer. Okay. There must be a better way to watch this. Okay, let's just try watching this. If this is actually, let me just quickly review this. What is this about, Amit? Okay, sorry. I do know what this is about, so we can watch this if you want. This is what I've also suggested is a bear case. It's the Duolingo thesis killer. I mean, from what I've really believed is that this is not a thesis killer, and that a lot of people actually like learning. I'm not one that actually has learned a secondary language, so to me, I don't personally understand the need for Duolingo. But I did do a lot of reaching out today with people that I did know use Duolingo, and I asked them, what are your streaks? Are you a paying member? Would you switch over if you had another tool that was free, for example? Most of the people that I spoke to said they were using Duolingo for free and not even paying for a subscription. So I'll talk about all that in a second, but let's just listen to this really quickly. Oh, sorry.
Oi. I'm gonna have her put these on, and she has no idea what I'm saying right now. These are translating everything I'm saying right into her ears.
Você tá falando isso?
Watch.
Como que isso funciona?
How does this work?
I've got these set up for dual ear mode, so I'm getting everything translated to English into my ear, and she's getting everything in Portuguese in hers. How was the trip?
Foi bem mais longa.
Are you hungry?
Pouquinho.
These can translate over 120 languages. There's no subscription, and they're on flash. So my dad.
I do believe that we won't even need this particular device, and that Apple AirPods or something like this will also be able to do this. But I think that that's also when Duolingo will also look to just be a general education app for many more things than just language. Now, it's also the distribution of these types of products. One, I think that they're going to be expensive and not for everyone. And two, Duolingo is making most of their customers not from the US to learn English to come to the US. So I don't know if that's necessarily, sort of a first world solution, if that makes sense. Now, we'll see how that ends up going. I don't actually think it's a thesis breaker until Apple rolls out something. Maybe the idea is once it actually rolls out, then it's too late. But I think there is something from what I'm hearing about the people that I'm learning from, is that it's more of a love of learning rather than the end goal of like, hey, you know what? I have the solution to my problem. You can pull out your phone and live translate. Today, everyone has that. Yet Duolingo continues to grow at 40+% rates. So these are the types of things where I think some people, similarly with Google, you can question everyone, hey, are you using more or less Google? And everyone is saying, oh, I'm using less now because I'm using ChatGPT. And then whenever you actually do look at the financials, you see there's more user growth, more inquiries, or more queries, and financials are going up. And that's the sort of bucket that I'm putting Duolingo in, is people are starting to write off this business whenever really it might still be growing greatly and be used for other tools like in schools and other B2B aspects as well. So what I would say is, let's keep an open mind. If you guys watched the Duolingo breakdown from Data-Driven Investing on the stock tank earlier. I would like to say the biggest skeptic. I mean, out of the 3 other people, they were all shareholders. I was the only one that wasn't, and decided not to purchase it after that was done. However, that was done at $345 a share, and we're already sub 300. This level of price movement cannot continue to happen without me making some sort of, relook and re-underwrite. Okay, so that's exactly what we're going to do today. As stocks take massive tumbles, I always continue to say, re-underwrite those stocks. Let's take a quick look at the company. We're going to do that 2 ways. One, a tiny presentation of things that I've created to look at, and then we'll just jump right into Fiscal AI's, tool, and take a look at all the metrics from there as well. So Duolingo, as most people know, is growing greatly, and they're really not seeing a stagnation of growth. And one of the things that made the stock pop so greatly in last quarter was the bump up of growth year over year to 41% on a total revenue basis. Subscriptions exploded to $210 million, and even advertising revenue jumped up to $20 million, which are smaller aspects of their business, but it still adds up to be a meaningful contribution. So let's go ahead and look at this too. Monthly active users has continued to climb up, and this was one of the aspects where people are pointing to say, hey, there's a bear case here because monthly actives had dropped just slightly. However, there was some sort of boycott Duolingo due to a comment from the CEO saying how much more they're going to be using artificial intelligence. Some people had determined that as being, hey, we're going to be firing people and replacing them with automated, robotics workers, and people thought that was a bad precedent. Then they had to sort of rescind that comment, said, hey, that's not what we were trying to say. We're just trying to tell our shareholders that we are staying atop the game, but we are still hiring heavily. One of the aspects, too, that you can see here in orange is that the percentage of daily active users as a percentage of monthly active users is growing, because every daily active user is a monthly active user, but not every monthly active user is a daily active user. Does that make sense? So the more we can actually keep people on platform, whether they're paying or not, is going to help them contribute to higher and higher revenues and higher average revenue per user. Now, the biggest stream of revenue is subscription. 210 million just recently, and that took a tick up quarter over quarter to 46.4%, okay, as a year over year change. So they are accelerating revenue in their biggest line item, which is subscription. You can see here the paid subscribers has now passed 10.9 million people, where as a percentage of the monthly actives, okay, has grown to a new high. So not only are they able to attract more users, but those users, they're able to turn into paying users at higher and higher rates. So over this 3-year period, which is what I like to look at historically, they've gone from 6% or 6.5% up to 8.5%. This is the exact thing that I like to point out for all the other subscription services like, SoFi Invest, SoFi's Money, like SoFi Plus users, or Robinhood Gold, or all of these other platforms, Netflix as well. That if you have not only a raising base of users, but then a raising percentage of premium, meaning you have a higher attach rate to your, high paying products, that's the gold standard. Okay. Duolingo does fall into that. Now, also, paying subs, the subscribers, average revenue per user has also started to climb. So the reason why we saw this massive fall off is their ability to start going international. And they did that at a great pace, which led them to, see a lot amount of user growth. But people in other areas of the world cannot be paying the same premiums of what you see here in America. We also see that in Netflix and Spotify and literally every other subscription service. You cannot charge the same amount in every geography, or else it's just not affordable at all. Okay. So the prices range depending on the areas of the world that you're in. And so as they were expanding into other areas, this has dropped their average revenue per user, but now that's starting to reclimb back up as not only they bring on, more paid subscribers, but they also add new higher tiers that have some attach rates that also bring up the amount of money that people bring or people pay on a per user basis. By the way, on a quarter-over-quarter basis, that took a massive tick up. Okay, nearly 80 cents per user on top of, growing the total users past 10 million. Then this was another aspect that I hear literally zero people talking about, which is advertising revenue. Now, if you were to look at a company, and we can break this out after as well, like Spotify, for example, they have a subscription revenue tier, and then they have their free or freemium tier, which is that you are charged with advertising. Okay. And the average revenue per user on Spotify is much, much lower. It's like 1/7 the return. However, Duolingo looks to be breaking out here, where they're not just seeing slight increases in growth year over year, but massive accelerations, 55+%. It was their fastest growing line item in the most recent quarter, was on their free tier. Okay, this is the users that say, hey, you know what? I like Duolingo for just being a free app, and I'm not going to pay them. They're not going to get a one-up on me. And here they are still making money on those users that say that they are free users. Those amount of users roughly tied to about 117 million, which consider themselves to be quote unquote free users. And the average revenue per user for those types of users on a quarterly basis is around 18 cents. Okay, much, much lower than what you would see. However, we have seen this much higher as well. They've been able to get, 24 cents or 28 cents back whenever this was more American-based than international, okay? In that same regard, if this is able to tick up and they're starting to target better using artificial intelligence and increase, other geographies in which they can actually charge more for advertising, you could see this climb up a lot more. And whenever I say a lot more, I mean, really, you could probably see this eventually at around $1 to $3 or so, which is, potentially 5 or 15x where it is on a per user basis, let alone the amount of users that they actually have on platform. Okay. Next, once you're actually talking about after all expenses that they end up paying out, and we'll look at that a little bit deeper once we open up Fiscal AI, that you can see that they continue to be more and more profitable. This is no longer a losing business. They are making higher and higher amounts of revenue at greater margins. And the amount that you're paying for this business, whether you're looking at a price to earnings or price to forward earnings, and we're going to look at a couple different aspects of ways to value this company as well, has dropped off a cliff as of the last few quarters or so, or even months or so. So as of today, we've seen this massive drop right here. And then on a forward basis, because they're expecting so much more profit, year over year than what they were getting the year before, obviously it's dropped like 50 points or 50x just year over year. Going to more forward basis, if you look at where they've been trading for in the last year, they are selling almost at the cheapest rate that they've been at this company on a forward price to earnings ratio, obviously because of those AI fears, nearly at 73 times, which was their lowest. And then at their average, we're roughly trading about 109 times, okay, which is expensive. But for a company growing 40+% rates at higher and higher margins, which means net income is growing even faster than 40+% rates, actually much faster, then they can find some growth pretty quickly. The next aspect that everyone or many people pass up on is just the quality of the business here. Obviously, people talk about market cap, which is the total size of the business, but less people talk about enterprise value. Enterprise value is whenever you add on debt to their market cap, because it's an extra fee that you're essentially paying for. If there's a company that's valued at 20 billion, but they have $80 billion in net debt, are you really paying $20 billion to buy that whole company? Because once you buy that whole company, you still have to pay 80 billion off to those banks and lenders that require that, payback. So really, if you look at enterprise value, if they had net debt of 80 billion, that company would essentially be 100 billion. It's a $20 billion company with 80 billion on top of it. If somebody were to buy the entire company of Duolingo, it actually wouldn't be 13.5 billion. It'd be roughly closer to 12.5 billion because they have $1 billion more than they do debt. Okay. In cash, I mean, they're more cash heavy than they are debt heavy. So looking at both, and by the way, this ratio has changed over time. The enterprise value has looked better and better as a ratio because they're getting lower and lower net debt and in big negatives. And then whenever we look at free cash flow margins, we're seeing 35% this quarter, 45% last quarter. These are unbelievable percentages. They've been constantly profitable, and that allows them to have great flexibility with the money that they end up having. So not just looking at the price to earnings or price to forward earnings, but also on a free cash flow basis, on an enterprise value basis, we're seeing now an EV to free cash flow of 38 times with an average of around 58 times, which is definitely not terrible, especially for the growth of this business. 38 times is extremely reasonable. And I'm not even pricing in EV to forward free cash flow, which would be expected at a similar growth rate as what we're seeing to, if they keep that margin and grow another 40% year over year, that's going to be quite successful. So just a quick rundown of the numbers, because that's what I think is what I'm looking at to potentially buy Duolingo here. And I haven't made a decision yet, but as a company sells off this much, this is exactly what people should be looking for in opportunities in retail. Is we see names that get heavily sold off with a misconception of their business. And I always say, let's continue to re-underwrite those types of businesses. So I'm going to look at it here at this price. I'm going to look at it again if it, drops to 275, and I'm going to beat myself up after looking at it a bunch if it then runs back up to let's say 350, 450 even. I'm going to say, wow, you know what? I looked at that company. I understood their business model. I have no excuse then if I passed it up to if I ended up missing out on gains. You can't have FOMO if you've done your research, okay? And that's a major aspect. And this is why I love Fiscal AI and why it's the only company that I actually work for on sponsorships and stuff, because the ability for me to do DD in these small timeframes, like if a company drops 8 or 9% or whatever in a single day, you're going to want to make sure that you can do that research to make the decision in a reasonable time frame. So if we go to Fiscal AI here, and I like to just look at things quarterly over a 3-year period, we can see exactly what I was looking at. Now, I'm just going to organize this as reported. So this is how they show off their numbers. And you can see how their revenue is done. We can just pull up this data instantly. We can look at, revenue change. So this is how I built all those charts. You just download them and boom, that's it. But let's go ahead and look at some other things as well. First off, if we go to estimates, bear with it. So let's switch this to quarterly, and then we're going to look at revenue trends over time. So as you can see, over time, their estimates have not gone down. In fact, the market is expecting Duolingo to continuously make more and more profit over time. Now, let's see where their median revenue here, they're expecting 260 million next quarter, 274 the next, 294, 320, and this is still with 12 analysts along the board. In EPS, are we looking quarterly? Yep, is expected. So last quarter it was 56 cents, 73 cents. What is that? My camera's in the way. 80 cents, 101, and then $1.26 over the next year as well. So they're extremely bullish and continuously, well, at least for the most part, back here, there was a little bit of, assumptions that they might end up lowering, but that it continues to increase into the right direction. In fact, I also checked on estimates price targets as well. I think we have price targets on here. Yes, we do. You can see here that for the most part, as of today, the average analyst price target is now sitting at $89 per share. Okay. Yet we just fell below 300, which is just crazy. The high target, by the way, for August of 2026 is at $600. Consensus is 489, and the low is 390. The low for next year is 390. We're at 290 right now. So the market is generally bullish, right? That's from 12 to 18 plus analysts. Let's go back and take a look at some of their margins as well over time. And you guys can tell me what we want to look at as well. But the more I look at this, especially on their advertising revenue and stuff, I see that exploding in the next couple of quarters. I thought that was quite interesting. If we go ahead and take a look at all of their segments, and let's just stack these. Subscription revenue obviously makes up for a large part, but that percentage of advertising revenue, like if we just look at these two main ones, the percentage of advertising revenue, if I take chat away for a second, is growing, let alone stacking on top of great subscription revenue could be very exciting for some investors. Now, I am looking for stocks that have been given up by not only institutions, but retail as well, that are just fundamentally strong. The only thing about Duolingo is that I am not a direct user of this product, right? If some people had concerns about Notion or something like this, they're like, oh, it's just a note-taking app. I would know wholeheartedly as a user what the differentiation is. But that's why I'm asking questions to people who are. And I do not see a lot of people that end up, missing their streaks. And in fact, I even saw a buddy of mine took a screenshot of his Duolingo, and he was using these freezes on certain days that he wasn't going to be able to make it to keep his streak alive. And I always think like the psychology of that is so funny, that you care about this in-game number, like just what this bird tells you how long you've been there. So you can freeze a day, and then if you need more freezes, that's also something that you can pay for, right? These sort of things that like just keeps people on the platform. I think the edge that people discount so much on Duolingo is creating that app that people want to come back and actually think is fun and engaging, right? There's been so many times where, there's a certain app that gets created, and then the bigger player, the Apple, the Google, something like this, ends up trying to come in and destroy that service, yet they can't make it seem fun and engaging. And whatever Duolingo has cracked in order to, create that audience is something that has been proven to be able to go global and scalable at higher and higher margins. Okay. Something that they're able to charge for. What's that worth? Right. And we have to remember that same management that was there in order to create the rigorous testing and like just unbelievable amount of A/B testing that allows people to come back on the platform, trying more and more questions. They said that they are going to be using artificial intelligence and everything that they need to not only increase their margins, but also make sure that the content is new and vibrant. What's that worth? Does that justify purchasing Duolingo if the stock ends up falling below $300 per share whenever analyst projections are placing it at 500 on average? Guy talks down Apple but likes Duolingo. Yeah, I mean, I'm not necessarily liking Duolingo. I'm not making a decision just yet, but I think that whenever companies get sold off on not real financial harm, but expected financial harm, that's the one that really bugs me. And there was a piece by Joseph Carlson that I saw. I think Tevis ended up, it was either Tevis's tweet or he replied to it. Yes, sorry. This was his tweet. I think that this is what made me choose Duolingo to cover today. Joseph Carlson said, Spotify was $150 whenever this article released. It's now $680. Google announces YouTube Music and YouTube Premium. The same sort of thing that I fell for in the trap of Apple potentially getting into finance and disrupting SoFi or Robinhood. The same sort of thing of, Google Translate features are going to crush Duolingo, or Amazon Pharmacy might crush hymns. I think that there is an unbelievable list of these companies that specialize in a certain aspect of business, or a certain category that users want to go to them for. And if the product experience, if the feeling of that app is 10x better than the choppy put together solution that YouTube or Apple put together, well, then that's going to be a real problem. Now, maybe translating language is going to be something just purely of the past, almost like writing in cursive, right? Just that I don't know if that will be something that is taught in schools anymore, because typing and these sort of things will be the real second language that many people will need to learn. I don't know. Steve had a fight with Joseph Carlson. Yeah, well, not a fight, but they're tweeting back and forth, and we covered that at the beginning of the stream. He did end up talking about Dillard's versus Nvidia, and I think Steve is quite amazing. Let's see here. Tanner, do you use Duolingo? No, I do not. No. However, the only reason why I would use it is for the chess learning app, which I think is very interesting. That part does interest me. And so if they end up getting into category, because I still love to learn, right? If they get into more categories where I think that that's fun and engaging, then I'm going to do that. Me learning another language, I don't really care. But that's just me, though. That doesn't mean the hundreds of millions of users that they have today aren't going to fall into that category. But they have Duolingo Music. They have Duolingo Chess. They have Duolingo, ABCs for children. So the more of those types of solutions that they get into that builds well into the ecosystem, cross-sells well, continue to benefit off of the app or the advertising ecosystem that they're creating and the premium solutions, then I could see myself purchasing into this. And if it ends up going from under 300 today up to 500, there's definitely an aspect of me where I go, yeah, I mean, the financials were there, is so clear, right? And that the AI worries were overblown. But that's just me. Yeah, I'm sorry, technology solves language barriers. Yeah, but that's the thing, right? Is sometimes I point to like chess, for example, at least based on so there's like models that end up learning chess and try to be the best chess players. For example, like Stockfish, I think we're on like version 19 or 18, something like this. They've essentially solved the game, right? These bots that end up playing this game would beat Magnus Carlsen because they play at like a 4,500 elo or 5,000 elo. Like it's not humanly possible to play that good. Yet after that game has been solved by artificial intelligence, the popularity of chess has exploded. It's now at the most popular state that chess has ever been in 1,300 years or whatever, and it's after the game has been solved. So I'm not sure that technology solving a learning app for education necessarily means the same thing. I can walk like if I went to Japan, for example, for holiday, am I going to go on Duolingo for a year before and learn it for a year and then go to Japan? No, I'm going to go with my phone and then walk into a convenience store and say, how can I get back to X hotel? And then point it towards them. And then it's going to say it in Japanese. And then he's going to say what he has to say. And then it's going to, retort back to me. Yet people still learn languages. Okay. A lot of the people using Duolingo are looking to get English degrees so then they can end up getting jobs here in America. They're not going to be, wearing earpieces during, job interviews and just saying, hey, wear one of these. You're going to understand me perfectly. That's not going to happen. So while I do agree technology will solve, small or the tourist problem and these sort of things, I don't think it solves the just pure education problem. That there could be real aspects of Duolingo where they end up getting into schools and selling into much broader environments. I mean, homework right now is something that's very hard to give out, from my understanding, due to artificial intelligence, because those kids can just run home and throw that thing through, ChatGPT. If there's a way that Duolingo could be the app that ends up monitoring your screen, your response times, all of these things, and then give those types of results to the teachers and say, hey, you know what, this is we did the lesson. We ended up showing off this. These were the answers. You can take it from here, whether you think that was AI or something like this. Like, I think there's so many aspects to grow in a multi, $billion+ industry that is education, if not $1 trillion industry. To me, Duolingo is all hype. See, that's the thing. That's every comment here. I don't see the hype at all. I actually think it's super hated. Like, Duolingo Play is over. I'm not seeing anyone get excited about this. So that's the interesting part. I also think someone said Americans don't get it. I also think that's true. I don't think many people in America learn languages nearly as much as people in like Europe, where there's so many other languages much closer together. I think that being multilingual is more popular in Europe and abroad than it is in America. Not saying that if you're in America, you don't know more languages, but it is definitely more popular. But I ended up doing a tiny survey. I don't actually think it quantifies as a real survey yet until it passes 1,000 votes. But I said, I'm conflicted on Duolingo stock here. Did anyone buy the dip? 11%. 24% of people clearly didn't, because they just wanted to see the results. And then the other, major portion of that, essentially 64% of people said, no, I'm waiting for a bigger dip, or no, this is a dead company. So I don't see the hype at all. There's no hype. That's what gets me interested. People look for the dips in the next plays, but no one wants to buy the name that everyone is leaving on the sidelines. This could be a big institutional play too, because these are the types of names that institutions also look for. They look for fundamentally sound businesses that get sold off by the markets. I'm still waiting to learn Canadian in Duolingo. Yeah, you're just sitting here not understanding me. Do you guys have closed captions on when you listen to me for a Canadian accent? I also wonder about that with other English-speaking countries that have strong accents. Maybe this is an insensitive question, but I truly am just curious. Sometimes if you're listening to someone speak English, but they have a very strong accent, you still need to put on subtitles. But does that go both ways? That like if someone's listening to someone with like a Californian accent or something like this, that other people around the world, can't understand them? That's just a genuine stupid question, but I do wonder. I don't think I can use closed captions for live streams. Well, that makes sense. That makes sense. I've traveled to many countries, and if you are with a tour, there are always guides that speak English, and I've never needed to learn the language. Yeah, but that once again, that goes to prove that Duolingo is going to do fine, because even though that's your experience, they have 100 and X million users. That's just continuously grown. No, Californian accent is known to everyone worldwide because it's what you see in the movies. Okay. Okay, cool. Cool. Let's go ahead and look at some of the margins as well on Duolingo, which I also think is quite interesting. So we talk about this company getting disrupted, but just the nature of being a software business that I've talked about so often is look at how profitable this business is. So from a gross profit margin basis, we're at 70+%. Okay, let's continue to trickle down this line item. So operating margin, we're actually growing up to 13% over the last little bit. Let's get a net income margin and a free cash flow margin as well. Net income margin, 18%. Free cash flow margin, 35%. These are the beautiful parts of buying software. And the interesting thing is these are not like stagnant, margins. These are ever increasing. Right? It looks like things continue to get better over time. Now, if we go ahead and look at, let me go to common size here for a sec, and look at things like stock-based comp as a percentage of revenue, we're now down to 14%, which is still historically high, but it is going in the right direction. Okay? So that I also think is very important. If they can continue in this trajectory, it'll make shareholders much more happy knowing that they are less dilutive. And then if Duolingo gets so sold off, look at their free cash flow. I mean, they could potentially distribute back to shareholders, whether that is buybacks or dividends. For the most part, it's still such a young business, they'll probably continue to reinvest. But it's not like Duolingo doesn't have the potential to buy back stock. This could be a PayPal on steroids if it ends up getting too cheap. Now, it's still not that cheap. Like on a forward basis, we're at like 76 times. But if you place it towards the good software names, which we could also do, we could chart that out here. I don't know if I'll have some time to do that, but we could look at, the Spotifys, the Shopifys, the Palantirs, the, MongoDB. Like you could get a nice range of software as a service here and chart them out to see, okay, how much are they getting for different margins? What are the multiples on those businesses? What are the growth rates on those businesses? Duolingo is going to look extremely cheap versus other software names because other people don't believe that, say, Spotify is going to be as disrupted as Duolingo will be. But it was at one time, right? Spotify, I think, is the one that I continue to look back on because there was super concern around Amazon Music, Apple Music, YouTube Music, all of these ones. These are unbelievably large AI names with budgets that are unending that just couldn't beat Daniel Ek and his team to create a good audio experience for people to listen to their favorite music, right? A small team ended up carving out a space in this environment and proved that they could stick around. Can Duolingo survive in a space where artificial intelligence can also offer a similar product that might also gain user traction, but that there is a the gamified difference and the real user experience is much different at Duolingo. That could be very real. Google's free tools could erode Duolingo's freemium user base. Yeah, but the Duolingo's freemium user base is also a free experience. I do think there is some aspect to Duolingo looking like Spotify, being in a similar experience of their competition is the biggest companies in the world. But it's also so niche that they can't invest enough. I'd say music is a much bigger industry than what Duolingo is in to disrupt them. Yeah, I mean, it just depends if this is what it's for, right? Are you going to translate everything in real time, or are you looking for more a human interact and like a want to learn? You could still go around today and have a translation experience. I'm not sure that's what people are looking for. I think people are looking more towards the tourist aspect of like, hey, you know what? I can still go to this country and I don't need to learn the language. When less people are thinking about like, okay, someone is going to travel from, or they want to travel from their country and start a new life in America or something. They're not going to be wearing headphones. It's not seamless today. I don't think wearing headphones for the rest of your life is seamless. I do think that real translation tools will get better. I'm not saying that that's not the case, but I also think there's something to Duolingo's fastest growing apps are non-translation related, like chess, for example, which would get me, someone who has no care, to do this type of thing, to download their app to learn a skill that is not related at all, right? And could there be many other aspects that they get into to grow adjacently or maybe even away from live translation while still having the real benefit being that gamification, that understanding of user behavior, because that's what they're learning. What if everyone started speaking one language? I think that's been tried many times. It's never going to happen. The only stock on sale is Nvidia. I don't think that's true. I think there's a lot of companies on sale, but you just need to look for them. And it definitely could be Duolingo. That could definitely be the case here. Now they're not doing any buybacks right now, so you can see this here. By the way, I should be sharing my screen. You see their buyback yield is just flat, so they're not doing any buybacks. Their enterprise value is lower than their enterprise value is lower than their market cap, so they have more cash, and you can see that even in their net debt as well. Net debts are in larger negatives. Okay, so they're taking on more and more cash. Margins are all looking very healthy. Looks like a good business. It's just whether or not that the thesis, which is the most interesting part, because that can make companies so oversold, yet in the face of it, we're looking at a company that's growing at 41%. Like PayPal is a company that's doing buybacks and is oversold and is in an area that people think is, dying to their, payment competitors and new technologies, and it's growing at 5%. This is 41%. Huge difference. So I might not just write that off too quick, right? Sales and marketing as a percentage of new customer ads as well is also looking extremely small. Their customer acquisition versus how fast they pay off, like whenever they pay for a user to come onto their platform, that user ends up either looking at ads on Duolingo or paying that subscription fee. They end up paying back that rate in about 3 months. So every quarter, they can then reinvest every dollar that they put in originally, okay? Which means that they can essentially flip over their sales and marketing budget 4 times a year. Like you look at SoFi or something, you can't do that in 18 months. You can't flip their sales and marketing budget in an 18-month period. They can do it 4 times in a year. That's quite interesting. Now, I did also add that I wanted to talk about Joseph just responded to Steve. Okay, we'll cover that in a sec. I did also want to talk about BMNR because this also is getting a little bit schlapped today. And once again, I think that this is the thing where people are just following price action. Bitmine goes down and people go, oh yeah, this is a bad company, it's a scam. It goes up and everyone goes, Tom Lee's a genius. These are the times where I look to potentially purchase a name like this. Right? Got a little donation here from Jose. Says Duolingo is after the entire education market. Plus, once they become an accredited educator, that'll be huge because now students will be able to skip formal education routes. Is that something that they're looking at going after? Because I could totally see that, and it's a major area. Yeah, they said so. Well, there you go. In terms of BMNR, though, I think if you are a believer that Ethereum will continue to catch more and more traction on a stablecoin basis today, and then tomorrow more tokenization of assets look to Robinhood and potentially even what they're doing at the Robinhood Summit, that could be very interesting. Okay. Some of this will take time, but the company that continues to not only have a play to acquire more Ethereum and want to hold about 5% of the outstanding Ethereum that's in the markets, but also if the stock is end up being worth less than the Ethereum that they have on their books, they'll buy back more stock. They have $1 billion of potential authorization to buy back more stock. And it looks like that's what they might start getting themselves into right now, as their stock has fallen below the price of their Ethereum plus cash as a combined like net asset value. So very, very interesting if you can end up looking at this company on some form of an adjusted enterprise value and you see a number that is either 0 or -0, or not -0, but like in negative numbers below 0. And yet they've been able to acquire so much Ethereum to bring up their ETH per share quite quickly. BMNR is very early too, only about 3 months. It's early. Yeah. No, 100%. 100%. I think it was like July they had $4 of Ethereum per share. Now they're at 40. It's just incredible. If BMNR turns out to be a scam, I'm glad to know I'm not the only one who's getting scammed. Scam is a funny word, right? I mean, they're a gap. They're a company that is covering themselves on a generally accepted accounting basis, and they do acquire Ethereum and stake it. I mean, I don't know how that would be a scam, let alone the person who is, the chairman and trying to be the biggest hype man around this is one of the most respected names in all of Wall Street and has been in the Wall Street game for like 20 plus years. I don't think he drops all of that for no reason. Can we call Steve to get his opinion on Duolingo or this Joseph Carlson situation, which I also want to cover? Let's go ahead and read his latest post, and then we can see. Let's try to find this post. Okay, so you're saying he replied. I'm not seeing a reply. I don't see a reply from Joseph Carlson. It actually looks like Joseph Carlson might have deleted his original Dillard's post. That's how it looks like he's replied. It looks like this post is unavailable. So I think the quote tweet that he did, Joseph Carlson said, "It's crazy how many people don't realize the last line is a joke." The last line, "We now have the Mag 8." Let's see if Joseph said anything recently. Okay. He also said, for those that have missed it, this is obviously a reference to Duolingo. Google just recently announced language learning and live translation in the Google Translate app. For those not familiar with Duolingo at all, this comes across as concerning, and the stock is down today with that concern. History is full of smaller, more specialized competitors doing well despite big tech competition. I think another clear one that people maybe underestimate as well is like, look how well Patreon is doing. Everyone uses Patreon, yet there's a built-in service that Google offers right in-house, but it's almost, featureless, and their take rate is huge, and so a lot of creators end up not choosing it. I don't personally choose it. Once again, I do like the ecosystems and will pay a heavier price to have everything all in one place, but that is not for everyone. And Patreon is, doing very well for themselves. But Spotify competes with Apple, Amazon, and Google. Shopify competes with Amazon and is growing substantially. Intuit has competed with Microsoft for years and has won. Roblox won against Meta Horizons. That's not a great example. And many, many more examples. My guess is that Duo is likely to end up the same way. The engagement mechanics that keep people hooked day in and day out don't exist on Google Translate app. Very true. And I think that it'll be difficult to replicate that engagement. I could be wrong, but time will tell. The thing is, as well, with the keeping people engaged, is I do think there is people's attention is so hard to keep these days. It's all about reels and shorts, and learning something just verbatim is something that is very hard to get a lot of people engaged, right? You look to, Rosetta Stone or some of these other examples that people have brought up where they're just essentially dead, because just going out to learn something as if you're back in school is no longer in favor. And I think Duolingo has benefited from capturing that dopamine hit and treating it like it's a real game, a real app, but yet actually teaching something useful. So I think their biggest moat is that fact that it is gamified and fun, and that's not easy to replicate. The viral marketing strategies and everything, not easy to replicate. Many companies are trying, but that's not easy. They have roughly an 80% rule of 40. Not easy. 2 billion plus people are trying to learn a new language. I don't know. Duolingo Music. Chess has over 1 million users, and it's the fastest growing new product they've ever released. And it looks like revenue does not grow below 37% year over year. You guys tell me. Let's give Steve a call. Let's get him engaged. And see what he has to say, not only about Duolingo, but for which we're on Joseph Carlson's side. Duolingo. Yo.
I just got blocked.
Oh, I'm okay. You're live right now.
Send me a link. I'll come on.
Okay. Bye. That's unfortunate. Looks like Joseph Carlson has had enough. Yeah. I do think Steve is an unbelievable person to talk with about markets. He understands the numbers. He's very well read. You try to bring up any example in the markets like Dillard's or Costco or something like this, and there's probably, there's a good chance he's written more than one article on the stock that you're talking about. So it's hard to brush something by him very quickly and say, hey, this company is, outperformed Nvidia or something like this. But I think it's a weird stance for anyone. And I I've had this conversation many times. Like, it's best that you just don't short anything. And by short, I even just mean opinion based. It's hard to take a negative stance on companies because most likely, just through human nature, that we are problem solvers and we can probably get past the bear cases that people have most likely, especially ones that become popular bear cases, because that's the number one objective for businesses, is to try to make sure that those are the things that don't happen again, right? Like look at Robinhood. People go, they stopped you from trading. I mean, if that ever happens again, I'll be shocked. Okay, I'll eat my hat. This hat will be in my stomach if that happens. But the number one objective, I bet, at the engineering team is how can we ever make sure that we never stop people from buying their meme stocks at the times where volatility is at its highest. So, because they don't want to lose. They're not here to make sure that, retail investors get pushed down. They want their customers to win. Like, I think sometimes people have evil thoughts about companies sometimes, when really all you have to do is just follow the money. Okay. How does Robinhood make all its money? Retail. Who do they want to win? Retail. It's that simple. It's that simple. That being said, for Duolingo or for Nvidia, I think their big thing is that, Nvidia is going to continue to win. Duolingo is going to try to make sure that they are involving AI and that a company is not going to come out just randomly and, stop them somehow. So I do believe that just having a negative perspective on any company is usually a bad thing. Bet well, or bet positively on the companies that you think are going to appreciate, and, don't make bets on the companies that you don't think are going to appreciate. I think that's probably best. Best show on Fridays. Yeah. So guys, it's going to be essentially Fiscal Fridays. We are going to try to break down a company like this and get a second side of some very well-liked companies, but also some very not so well-liked companies, if I think that there could be some opportunity there. So, you know what? We could have talked about a company that was much more popular, and that would have garnered a lot more traction, but I don't know if you would have seen the exact level of potential opportunity or alpha in the stock. So right now I talk about Duolingo. Maybe next week we talk about another name that's very popular, but that's not what we're here to talk about at this very moment, as we now have a special guest coming on to the show. Ladies and gentlemen, please welcome the one and only Milkman, Steven Fiorillo.
What's going on, buddy?
I'm doing very well. Really quick, Necro, thank you so much for the the D-Local donation. We'll add that to the community portfolio. Thank you so much, brother.
Are you really long Duolingo?
I'm not long Duolingo, but I just reviewed all their numbers, and the cheaper this thing gets,
Did
obviously,
you not see what I sent to Mid and we went over today?
he sent me the Instagram thing,
Okay.
but I don't think that matters. I don't think
that's going to matter.
You know what? I don't think many people are going on Duolingo so then they can go on vacation. Like,
No. But you think about it. If you're younger, it's much easier to learn a second language, especially if you grew up in a household where your parents are bilingual or trilingual and they speak different languages. It's much easier to grasp it when you're younger. When you're older, it is much harder to learn a second language. And as technology gets better, those earpieces are just going to get better. And there's going to be no reason to learn a second language, a third language, or a fourth language, because everything will translate in real time. And as you speak, it'll translate back.
but I don't think that's why people are using Duolingo today. I mean, I could go right now with my phone and, go to some Spanish country and say, hey, where do I find this nearest hotel? And then it will reply back in Spanish or Portuguese or something like this. I could do that today. Like, I think the interesting part, well, one, a lot of customers on Duolingo surprisingly are learning English. If someone's trying to come to America for a new life, new opportunity, they're not going to be able to get new jobs and careers and everything through the earbuds.
Right. And from that aspect, I agree with you. I'm just saying overall, I do think that Duolingo is going to have serious problems because of technology. and there's just better opportunities out there. That's all.
But if it gets too cheap, like
Sure.
I don't know. A lot of people think PayPal is dying. A lot of people thought Google was dying because of artificial intelligence. You know, is there a certain rate in which this becomes that PayPal or Google where it's oversold and they're still making bucket loads of cash in front of a big bear case?
I'll have to look into it more and give you an answer.
See how he didn't immediately disagree? So there's something there.
No,
He didn't mind it.
I've never looked at the numbers before, but I just think the premise of it's flawed. That's all.
I will save you some time. You can just go back in this live stream after. You can watch me do it all on Fiscal
I
AI.
like doing my own due diligence. It's okay.
Well,
Not
you're
that I
not
don't
helping.
trust yours. I just want to do my own due diligence, and then we can cross-reference.
Yeah.
But
No,
hey,
it's just-
I just got blocked.
why is that?
I don't know. This guy named Joe just blocked me. He doesn't want to, respond, and he doesn't think I'm a serious person. Yet yesterday I was ranked number 18 out of 31,865 financial bloggers and number 26 out of 41,869 experts on tip ranks. But hey, I guess I don't know what I'm talking about.
Well, did he say you're not a real person or something?
No, he said I'm not a serious person and that I'm troll farming. Like, I'm not troll farming. Everything I'm saying is accurate, especially what I said to him tonight after his post about cherry picking data from Dillard's versus Nvidia.
Troll farm. I thought your post was beautiful.
Yeah, I mean, thank you. How am I troll farming? Like, if I was troll farming, I wouldn't be writing posts like this.
I think you were right to say, hey, you pick something that like or a timeline that just greatly benefited Dillard's. If you zoom out at any other point, it greatly benefits Nvidia.
I mean, it's just math. I can't make up the numbers. It's just math. The pandemic was March of 2020. In August of 2020, a lot of the country was shut down or severely declining in people going to stores, and Dillard's was just forming a bottom, while Nvidia had more than doubled from the beginning of the year already. So it's cherry picking data just using a 5-year period.
Yeah.
I mean, there's no other way to say it. It's cherry picking data. Go back a decade and Nvidia smokes it. I put the side-by-side comparison. It's just math.
Yeah. Also, like, I love whenever I see this number, the Nvidia 439,000, because every time I look at it, it goes up by like 1,000%. Because
I mean, does Bitcoin even beat that? I mean, it's incredible.
Because the amount that the stock moves now is 10x where it was, from the beginning, 30x from where it was in the beginning. So that number, every time I look at it, just goes up by the most unbelievable percentage.
Somebody actually did it. Somebody did me a favor. I love it. Replying to @Joel Carlson and dividend streams. You blocked @dividend streams for trying to engage in a friendly intellectual debate. He answered your questions while you seamlessly tried to mischaracterize the debate. Thank you, Ash. I appreciate it.
I think you were polite, but you're disagreeing, right? You don't have to agree with him.
Yeah, I'm not disrespecting him at all. I'm using all numbers and facts. Every one of my posts have been factual with numbers.
Yeah, the only disrespectful thing that I thought you did was you said, it's late at night, so I'm not going to write a long post. And then you wrote like 5,000 words.
That's not a long post. Like, if it was 8 o'clock, I would have wrote 3 times as long.
It was so long, and I thought it was disrespectful to me as the reader.
That's what you're going to get from it.
Thinking that I was going to get into something small, and it was a book. You wrote a book to him at night.
Look at my Seeking Alpha articles. They can be 3,000 to 4,000 words. What I wrote in 15 or 20 minutes was a short post for me if I'm engaging in this type of intellectual sparring.
And he intellectually blocked you.
Well, but I mean, I guess he's not trying to have an intellectual conversation with me.
Yeah, I mean, maybe he'll have you on one day to talk about it. I know for me as well, if I ever disagree with someone on X, it always looks like I don't reply, but I can't get my words out through writing. I'd rather just have someone on the show and talk about it. So most times if someone asks me a question on X, I'm like, I'm not going to write 5,000 words like Steve does. I don't have that type of skill. But
I mean, all I'm saying is that I give the guy facts and I give the guy math, and I answered all of his questions, even though the questions were greatly tilted toward Costco. And I
they were, yeah.
answered, like, if you read my post, I was very fair and honest, and I gave Costco a lot of credit, and I did not try to turn the tables on him, but I did bring up some weaknesses that Costco may have in the future and pointed to where the revenue may not be as sticky as he may think. And I asked him one question about Nvidia, and he refused to answer.
What was that question?
We'd have to go to where I gotta find it. Hold on.
Yeah, I think that those are fair points, right? And it's hard to argue that the biggest company in the world is somehow a poor investment. I mean, it can be. I mean, to some degree, Cisco was a terrible investment whenever they were the biggest company in the world, but they also didn't have, you know, the PE ratio or the forward PE ratio that Nvidia does today. It's a very different situation. Sebs here says, Duolingo in the community fund. Also, Carlson is making a joke with the Meg 8 comment, and everyone is replying seriously. I'm watching the joke go over everyone's head, and it's hilarious. What was the Meg 8 comment?
Oh, I mean, that's going to be easier for me to find. Hold on. So,
Sebs, thank you. I will put Duolingo in the community fund. And the more I look at it, the more I actually think that'll do quite well.
so somebody said, to be fair, Joe did say it was a joke. LOL. Steve is unnecessarily on this one. So I responded to that person. I said, to be fair, what Joe Carlson show said was, quote, it's crazy how many people don't realize the last line is a joke, end quote. Parentheses, the last line. So then I put, the last line was, quote, we now have the Mag 8, end quote. And I then said, if he had said the post was a joke, I wouldn't have responded. But he clearly stated that that only the last line was a joke. That clearly indicates the remainder of the post was serious. I mean, I'm not saying anything incorrect there. He specifically said the last line was a joke, not the entire post. It's fair game.
You're talking about in this Dillard's post here.
No, I'm talking about what, yes, we now have the Mag 8. So he basically said that that was the joke part, that we have the Mag 8.
Don't realize the last line is a joke.
Right.
Yeah. No, I wouldn't read that any other way. Yeah, I mean, these are factual statements. It's just maybe a handpicked timeline.
How do I find my reply to him?
I don't know. If he blocked you, it might have deleted it. I hope he didn't block you because
He did. No, he 100%. Oh, here we go. I gotta show more replies, I guess. No, it was from my second long post that I wrote. It was the one that I wrote it late at night. I asked him a question there. I legitimately can't find it now, and I think it's because he blocked me. Hold on.
By the way,
oh no, I got all right. So I answered all of his questions, and then I said I played your game. Now, how about you answer a question for me? I'd like you to explain why Costco should trade at a higher earnings multiple than Nvidia based on the current financial trends, financial statements, guidance, and outlooks from the analyst community over the next several years. Crunch some numbers for me and see what you come up with. I'm asking more for you because you may find some trends you're overlooking when it comes to Nvidia. I mean, that shouldn't be too hard for somebody who has a finance YouTube channel. Just saying.
Joseph Carlson is a very well-read dude.
I don't know who he is.
He's
I've
I
never
would
watched
say
any of his videos, but he asked me some very tilted questions, and I answered them very professionally. I asked him one question with some subsets, and I get blocked.
I would say he leans closer to the value investing style, and that he stays away from hype or hyper growth names.
Yeah, I mean, it's hard to say that Nvidia is hype when it just generated Costco's entire year of net income in 27 days.
Oh yeah,
I mean, it's a little hard to say that that's hype. It's a little hard to say a company that just did 26 or 27 billion of net income in 3 months is a hype company.
yeah. I think that he, and I'm not Joseph Carlson. I'm not speaking for him, but if I were to say, which company has the potential to have a negative revenue year over year quarter in terms of a growth rate, it's not Costco. It is Nvidia. It's just, how long do you think that build out is going to, like how long is the CapEx build out for data center going to happen? And I think it's very long, but potentially he doesn't want to speculate on that, and so he doesn't invest at all.
One of the replies is so funny. Joseph is a medium well steak kind of guy. It's funny.
Speaking of which, we should get a Mitt on and see his comments on Duolingo.
I think you got 24 to 36 months on the short end of the CapEx build out for data centers. I don't think you can really predict out further than that. I think we need to get another year and a half into the cycle and see how the CapEx expansion progresses.
Yeah,
it could be 5 to 7 years. It could be 10 years. It's just there's not enough data to support that at the moment.
no, I get that, but he's like, I don't even think he wants to speculate on that. That's all.
I mean, there's nothing to speculate about. Every company has said they're not stopping.
I get it, but all I'm saying is I would look at him very similarly to Warren Buffett, where would Warren buy Nvidia? And I think the answer is probably no. Or is he closer to purchasing Costco? Maybe, but he also, I don't think, is touching Costco either, because the valuation is just crazy.
I mean, my question was, why does Costco trade at a higher valuation? I mean, I think it's ridiculous. Costco's so overvalued trading where it is. It's got limited growth potential. And look, when you make an investment, you are paying for all the future cash flow that a company is going to generate. And Costco does not have the upside growth potential in revenue. It's actually decelerating. Its earnings expansion is low to mid single digits on an annual basis. And it's just shouldn't be in the same realm. The fact that, I mean, it's hard to say that when you look at Alphabet, Meta Platforms, Amazon, Nvidia, Apple, and Microsoft, that Costco trades at a higher valuation than all 6 of those companies. Like, it's hard to defend that and actually think that that's accurate, that Costco is trading at a reasonable valuation at that level when you're trading at a larger valuation than those companies. It's crazy. Why? Because the membership is sticky and generates billions of revenue. I got news for everybody. Amazon Prime is more sticky than Costco warehouse membership. And if Amazon decides to really scale into big box, their logistical network is so vastly superior, it will really start to hurt Costco. So I don't think that their membership is as sticky as what he thinks it is.
I think that's fair. I think that's fair. Another one of the topics that we were covering earlier today was BMNR. What are you doing with this dip? What do you see with them in terms of the cash and Ethereum that they have on the books being worth essentially more than what they are valued in terms of market cap?
Yeah, I think it's an interesting proposition at the moment. I have been buying Ethereum. I bought BMNR, I bought SBET, I bought Ether Machine. I am going to continue to buy these going forward. And I think that Ethereum is going to do very well in the future. And I don't know which one of the 3 big treasuries is going to do the best. So I want to own all of them. And they have a big advantage over me because not only can I not stake in the state that I live in, they can stake, they can restake, and they can restake through DeFi. So they're going to be able to add a lot of accredited net income immediately and plow that right back into more Ethereum to grow their book. And when you look at tokenization, when you look at stable coins and everything settling in layer 2 Ethereum, I really do think this is a massive opportunity. It may take 3 or 5 years, but when you read through the Genius Act, you really, or at least I really see a pathway for a tremendous amount of settlement transactions on the Ethereum blockchain, and then Ether getting burned off and this becoming much more valuable, and it really being digital oil.
Well, we also have the Clarity Act coming out soon. I think that's expected in September, October, which is another piece, which is the infrastructure layer of crypto.
You got to see these people on Twitter are hilarious. You got to see this.
Bro, I'm trying to keep us on schedule here.
They made me into a baseball card with the career statistics. This is hilarious. Did you see this?
No.
Oh my God. Look at this.
I mean, yeah, I don't know.
That's hilarious.
I hope he unblocks you. I think I'm going to reach out and see if he will unblock you, because I don't want to sour any relationships online.
You don't need to reach out to him. I truly don't care if he has me blocked or not. I just think it's weird that he blocked me. I didn't say anything to offend him. I'm engaged. Like, he's on a public forum talking about finance, and I simply engaged with him on an intellectual level with facts. I'm not spewing anything that's inaccurate. I'm using all math, all real numbers. And I just think it's ridiculous that the guy, instead of engaging on a public forum and having an intellectual conversation, that he mischaracterized what I said multiple times and said I didn't understand what he was asking when I clearly did. And then he just blocked me because he thinks I'm troll farming. Like, if I was troll farming, am I going to go to the length of writing 1,000-word post at midnight if I'm troll farming? No.
No, I don't think it's troll farming at all. Like that, I didn't see that statement, so I don't know. But I don't see how anyone can see your post and think it's a troll, right? You're bringing up the real arguments, and I think even to highlight some of the concerns that he's been having with Nvidia, like the customer concentration. Brad Gerstner said something very interesting the other day, where he said, like, you know, the size of the customers that are customer concentrated to are the size of countries. Like, it's like saying the US is customer concentrated to the Middle East, Europe, or South America. Like, they're unbelievably huge. So I think that's perfectly fine, man.
Look, if he doesn't want to engage in these types of things, he shouldn't be posting.
Yeah.
Like, don't make a public statement like that about Costco's valuation and go down that rabbit hole if you don't want to engage with people who have a difference of opinion, and actually respond in a respectful and intelligent manner.
Yeah, you were respectful.
So I just think it's crazy. It's just weird.
Yeah.
I'm obviously not a troll farm. Like, I don't need to troll farm him.
Right. And I don't think you're trying to do that. I don't know. I think maybe maybe he sees the ats out to Amit and these people as trying to garner attention for it, but literally every single one of, like, he needs to just look at your posts. You do it every
one of my
time.
posts. I tag you guys in.
Yeah.
Like, every one of my posts. Like, trust me, I don't need to freaking engage in troll farm. I don't need to. I could delete my quit Twitter account tomorrow and be just fine.
Yeah. No, obviously I'm on the side of Nvidia is or should be higher priced than Costco, but I just think there are growth investors and there are value investors, and they're essentially looking through two different lenses. And it's
but Tanner, I'm both. I love value, but I like growth also. Here's the thing. Coca-Cola has their products in over 200 countries and territories. You're going to tell, not you, but like, are we going to make the argument that Costco's revenue is more sticky than Coca-Cola? I mean, I don't know.
I think
It's
that's
kind
fair.
of crazy. Like, that's a good argument because not only does Coca-Cola have their products in all those different countries and territories, but at the same time, they're in what, 60% of restaurants versus Pepsi. It's definitely a bigger split. I'm just using 60 because I see it in more restaurants than Pepsi, but their revenue is incredibly sticky.
Yeah, yeah.
They traded at 20 PE or 22 PE. So why does Costco get a double valuation than Coca-Cola on a forward basis?
Yeah, yeah. No, I don't know. I even think Coca-Cola is trying to get into more of the healthy drinks area, which is interesting. But I've always been anti junk food companies. I think that that's an area that I'll never touch.
Yeah. Okay. So let's use something in a similar space. Why does it deserve a bigger valuation than Walmart? We won't
Right.
even use that. We won't even use the Amazon example. Walmart and Costco do the same thing. Walmart does not have a cloud service division, and they traded a bigger valuation than Walmart on an earnings basis. Why is that? Walmart's got a better logistical network than Costco.
I think the people who go to Costco are fanatic about Costco. You know, I I think that could also be true about their investing base as well. That it's almost like a company that you marry into. Yeah, someone said the hot dog. That yeah,
For the hot dogs.
but
It's for the hot dogs.
it's for the hot dogs. I do think that Walmart is a sneaky play as well because I think their e-commerce stuff has been amazing, and I'll even get grocery delivery from Walmart to my house because it's just free. Like you could just sign up for it and they don't add any additional cost to the actual produce. And although I have a Costco membership, sometimes I just don't want to go in or don't want to buy in bulk. So if I need something delivered to the door, I'll use Walmart, and you know, it's crazy how good it is. You would think
So-
you wouldn't want someone picking your produce, but I think they actually take out like the best stuff for the like we'll get all sorts of produce and it's always super nice, even in
Yeah,
delivery.
because they know if they don't, you're never using it again.
Right, right. So it's always like super. I don't know what exact example, but like huge ripe strawberries, for example. And I'm like, dude, I like these are hard to find if you were to walk in the store. Let alone, I think they literally pick them and put them aside for e-commerce before the day starts.
So I want to read this to you. So Walmart is expected to do $2.94 of EPS next year. They're expected to grow their EPS by 13% year over year, and they're trading at 32.65 times next year's earnings. 39 analysts have that as the consensus, okay? 32.65 times. Costco is expected to do $20.09 of EPS next year. They're expected to have 11.05% growth, which is 2% less than Walmart, and they're trading at 47 times next year's earnings. It doesn't make sense. 32 and a half versus 47 times. It makes no sense whatsoever why Costco is getting this much of a multiple over Walmart.
Right, right. Here,
Like, I
let's-
don't think that this is being unreasonable. Like, Costco's valuation is broken.
forward PE, and then let's just take the forward PE away. Yeah, Costco right now is at a 53 times, and Walmart's at a 36 times. And then if we just flip this around and look forward, Costco on a forward basis is 48.7 times. Walmart's at a 35.3 times. That's just on PE. And you said their growth rates. What's happening with their growth rates?
Walmart next year is expected to do 13.4% EPS growth, and Costco is 11.5%. Costco's got 2% more EPS growth next year. on a year-over-year basis.
On a forward basis, yeah.
It just doesn't make sense.
Also, I showed you Fiscal AI before. What do you think about it? I mean, this is a pretty fucking...
When you showed it to me, it was very cool. I was very impressed with it.
What other ways can we look at Costco versus Walmart or even Nvidia? We should squeeze Nvidia in here.
I mean, you squeeze Nvidia in there, it's going to be crazy.
On a PE basis, let's just drag it forward to get rid of that. Yeah, it's crazy. Eh? Like at this point, I think this is whenever we had our conversation the first time around for Nvidia, and you're like, this thing is super overpriced. Or maybe that was in 2020.
Fully agree. I fully believed it was overpriced. And this was before the ChatGPT moment and before all these companies really start expanding CapEx. I just really thought it was overvalued, and I was 100% wrong on that.
So on a PE basis, Nvidia is trading at 49 times and Costco at 53.5. How crazy is that?
No. So next year's earnings, Nvidia is trading at 40 times. They're expected to do $4.49. They're trading at 40 times next year. And Costco is trading at...
I'm seeing 30 times here, man.
Huh?
I'm seeing 30 times for Nvidia.
You're seeing 30 times for 2027.
For fiscal year 27, this is 1 year.
The year that we're in, I'm sorry, I'm reading it wrong. You're right. Yeah, you're right. 28.6 times next year. You're right.
So it's cheaper than both Walmart and Costco on a PE basis.
It's ridiculous.
Yeah.
And they're expected to do freaking 40% EPS growth next year.
What's their free cash flow yields on these three companies?
Like, there's no argument you can make to justify Costco having this type of valuation.
Let's see what about...
and that's really why I wanted to answer these. Maybe he can change my mind. And I'm willing to change my mind. I changed my mind on Nvidia.
Yep.
I put a bunch of money in it. And I thought it was overvalued for a long time. I disagree with you. And then I said, you're right. You're 100% right. You've been right the whole time. I was wrong. And I put a bunch of money in it. If he can convince me why Costco deserves the multiple and is cheap, I'll put a bunch of money in it.
No, I agree, man. I think that's one of the best, mindsets we can have as investors. And you have, by far the best one of being able to turn on a dime. But that's also why I think that, whenever I say that you're going to be a hood investor one day and you say, no, I'm like, dude, you don't even understand yourself. Like you do switch on a dime and you will buy companies if they prove to you fundamentally that they're right.
I will say, I am starting to like their platform on the app. I will say that. I'm not going to knock it. I have bought Ethereum a bunch of times, and I got to say, they did build an efficient mousetrap.
I mean, that's a good compliment to somebody that was a Thinkorswim diehard.
Like 100%. It was a good mousetrap that they did.
Good founder, good profits, good margins, good revenue growth.
Margins are freaking great.
The margins are unbelievable.
Margins are great.
I think their rule of 40 is like 113% or something. Like you're talking about Nvidia numbers here. You're talking about Palantir numbers. They're some of the best. So why would you? What makes you not want to touch them?
Especially when they just authorized a $60 billion buyback. And
I'm not talking about Nvidia. I'm talking about Robinhood.
I'm going back to Nvidia. I'm not investing in Robinhood.
But why not, bro?
Because I think a lot of the upsides are already squeezed. I don't think there's much more to squeeze out of this investment over the next couple of years.
So, yeah, I don't know. I think if you are to look at their revenue, it's gone one direction. You know,
No,
and this
I'm
is
not talking about the underlying metrics. The underlying metrics are great from a business standpoint. I'm talking about where the market cap is now. I don't think Robinhood can double over the next 2 years, but I think Nvidia can.
Devin Ryan thinks, you know, over the next, I think it was 5 or 10 years, something like that, that this stock will be at roughly around $500 per share. That doesn't interest you?
So, and I don't know who that is, or do I? Is that the bull? Is that the SoFi bull?
He is a SoFi bull. He's a top analyst on Wall Street. He's the
Which
number
firm
one
is he with?
fintech analyst on Wall Street.
Is he bald, shaved head?
No, he looks like
Who am I thinking? Am I thinking of the guy from Wedbush?
Dan Dolev. Yeah.
I'm thinking of Dan Dolev. Yes.
Yeah.
All right, but so not knowing him and not knowing what his thesis is, I'm going to speculate that his thesis is that over the next decade, there's going to be a huge wealth transfer, and the majority of people that inherit are more likely to utilize Robinhood as their platform, and they're going to move the money from a JP Morgan or Morgan Stanley or Schwab or Fidelity into their Robinhood accounts, and that's going to create massive tailwind. I can see that happening.
And you know they're getting into banking like in a few months, right? Like they have a
I can
full.
see that happening. I just look, me putting fresh capital in, I have to think about where I think if I'm not investing for income and I'm investing for my capital appreciation side, I got to think about where I'm going to get the best bang for the buck. And right now, it's Ethereum treasuries, and Nvidia.
Yeah, but you're betting on how many other companies are you betting on? You have many growth companies in your portfolio.
I mean, I got SoFi and Palantir in the portfolio.
Just those names?
Well, I mean, what do we consider growth? I don't consider Amazon a growth company or Alphabet a growth company or Apple a growth company or Meta a growth company or Salesforce a growth company. Just saying.
Yeah, I think Robinhood has the opportunity to double their revenue, not just by going international, and then
I'm not
doubling
saying they
it.
don't. I think it's going to be an easier double in Nvidia than Robinhood over the short term.
I'm just talking about I'm just talking fundamentally. I'm not saying the stock doubles.
There's nothing fundamentals I don't like about Robinhood.
Yeah.
You know, Robinhood's a great company. I mean, their metrics are amazing. I just think that there's a bigger opportunity elsewhere.
The so in SoFi is social finance. What's it called? What else are you looking at these days?
That's it, Ethereum.
Ethereum.
That's it. I'm so deep down the rabbit hole on Ethereum that I'm just.
Can you tell me another thing? BMNR or in these types of names.
Yeah.
Do you have an option strategy with these names?
Not yet.
Okay.
I will.
We were looking in the after hours of the SoFi or of the FinTech Thursday show, which you missed and we missed you.
Yeah, I was working late last night.
But we were talking about the covered call premiums are just absolutely insane.
They're insane.
Insane, right?
Look out next year. It's crazy how big the premiums are.
Yeah. And then, you know, the leaps and everything, like the stock is just incredibly unique and there's a ton of volume on it. So right now,
I'm bringing up the option chain right now. What I found interesting was that if you do January 2027, like you could sell the $100 call option for $12.40, which is what almost 28% of the share.
Yeah, like 30% of the thing.
Like that's incredible, and you're getting a year and a half out of it, and more than double where it is right now. You're effectively bringing your cost base. If you were to buy 100 shares right now, you're bringing your cost basis down to, 31.
I think that just goes to show you how, like, if he really does think that Ethereum goes to $10,000, $12,000 by end of year, BMNR is going to be a lot higher than 100.
The option market sure as hell thinks Ethereum is going through the moon.
Yeah. Yeah. That's what makes me interested. And by the way, I think I purchased the stock wrong, because from what I was talking with Chris and Roy and Steve, is that I probably should have just written like really short dated cash secured puts to get a premium to purchase it, rather than
Well, if you think it's going to fall, then you could certainly write cash secured puts and get paid to buy it instead of just buying the shares.
couldn't I just done like next day, or like essentially just
Well,
like
not
super?
next day, it's on a weekly chain.
No, but if I did this like say yesterday to Friday, I could have done that for tomorrow.
Yeah.
And then just make it like either in the money or really, really close, and then write cash secured puts on this.
Yeah, there's all different ways. I mean, you could do that. I mean, what's interesting here is you could sell the $100 call option for Jan 2027, take that 1250, and you can go buy the February 20th, 2026. You could buy the $48 call option for the same price with that premium. So you could effectively buy the stock, sell a $100 call for a year and a half out, and then buy a $48 call option, which is pretty close to being in the money for 6 months out, and get that call option for free.
Yeah.
And I got to really crunch some numbers. It's really interesting what's going on here.
Yeah. Right now, I just have equity, and I'm not writing anything on it. But yeah, I will be as it accelerates. But I'm, I don't want to add to it too quickly, because it's I don't want it to become a big position in my portfolio. But I did end up purchasing it, and it will be a single digit percentage of my portfolio. At least between that and SBET as well, and Ethereum. Like,
have you looked into the Ether machine?
No.
You need to look into it. Do you listen to the Bankless podcast at all?
I do sometimes.
I just started listening to it. I've listened to like 8 episodes in the past 2 weeks.
Your soul day. They'll sell you.
Oh, they're great. The guests that they have are great. You should listen to the one with the founders of the Ether machine. It's really good. I mean, he started the treasury with his own ETH. Like, he's an ETH day zero guy.
Yeah. Do you know Vitalik Buterin used to write blogs, like insanely popular blogs for Bitcoin, for like Bitcoin Magazine or something?
It did not.
And then I guess he just saw a problem that deserved to be solved. That's another thing that I think is really interesting about Ethereum, is like there's been massive updates in the code base, and how they've made it like much better over time through these big updates that the community agrees on and upvotes. And it's like the Ethereum that we see today might not be the same Ethereum that we see years from now. And like, what does that open for the opportunity for the chain? And like, I think the market institutions have already shown you that will be the popular chain, at least for tokenizing finance.
Well, and I also think it goes past that. You're not going to see, my opinion, stable coins in Bitcoin. It's just that they just don't settle quick enough. And it doesn't have the smart contract protocol. I just don't see it happening. There's a reason Circle is utilizing layer 2 with Ethereum.
Yeah.
So I really see that is where it is. And that's why I'm down the Ethereum rabbit hole right now.
Okay, brother, I think I got to run. Is there any last things that you want to say?
No.
That's it? All right.
Yeah.
Ladies and gentlemen.
What am I going to say?
I don't know. Check out your Seeking Alpha or something.
I didn't come on here for that.
Well, ladies and gentlemen, he's got a Seeking Alpha at Steven Fiorillo.
Thank you.
But until next time, make sure you subscribe. Thank you to Fiscal AI for this episode, sponsoring the episode. And you can check out the exclusive discount in the description down below. Bye for now. Oh my gosh, it's not ending.